And good morning, good evening, good afternoon, ladies and gentlemen. Welcome to another edition of Bulls versus Bears, the weekly Forex forecast. I'm your host, Dr. Greg McLeod, Chairman and CEO of the Elite Traders University and creator of the My Market Heat Map. And so good to be with you on this beautiful Saturday. I hope you guys are doing well and we're ready for the week ahead for Forex trading, any type of trading. So we're going to get started momentarily. I'm just going to go ahead and share my screen with you so we can go ahead and get started and dive into the markets. This is your weekly Forex forecast, but you can, we trade a lot of different stuff too. In fact, we're trading gold and having great success with that. We're going to have more information. In fact, I'm wearing a shirt with a little gold bulls showing you that what my feeling is about gold and a new strategy that I've come up with and a new mentorship and new types of classes are coming in our what we call a gold flipper program. So look forward to hear more about that. So make sure you like and subscribe, and also subscribe to our newsletter. Come to Elite Traders University, get on our mailing list so you can know when we drop this hot course that will definitely change the way you trade anything. Okay, but particularly gold. Okay. So let's go ahead and I'm going to share my screen with you, and we're going to share screen one. Why not? All right, let's get to it. Okay. And welcome, folks and folkaroons, traders and traderettes. My name is Dr. Greg McLeod. This is brought to you by the Elite Traders University. We are dedicated to your trading success. Okay, it's not just when we use a high probability strategy that I developed working as I worked at a Wall Street firm, one of the largest Wall Street firms in the world. And I worked there as a currency analyst and strategist. And I have 30 years of experience in the markets. And I'm uniquely qualified to help you get the results that you're looking for in the trading market, in the trading realm. Okay. So let's go ahead. This again, the weekly Forex forecast, bulls versus bears. And you're going to get my insights, my views. These are just my opinions and what I think the market will do. If you've been watching, if you're a subscriber, you've been watching this for a while, then you know that my record is pretty good. Okay. So if you want to like, subscribe, hit that subscribe button, share it with a friend. I'm sure you got other people who are trading the wrong direction, need some help. And we have this weekly Forex forecast that I put out. We also have a newsletter. If you go to forexbabypips.com, you can get the archive of these for just $7 for the entire lifetime. Lifetime access to the weekly Forex forecast, the newsletters, and other. We have a Forex Baby Step a website, membership site that you can go to with a course that can help you get started with Forex, even if you don't know a darn thing about trading. We have the Forex Baby Steps trading community. We have weekly free webinars on Thursdays at 8 p.m. And you get all that for just $7. Okay. More than about less than a cup of Joe at Starbucks. You can get into the world of trading with Forex Baby Steps community. $7. Go to the letter X, babysteps.com. Talk to you there. Okay. So anyway, let's go right into our weekly Forex forecast, bulls versus bears. Give me on the music, but I want to direct your attention to risk disclosure on your screen to make sure you understand all the risks associated with foreign exchange trading and trading in general. And who am I? My name is Dr. Greg McLeod. I've been doing this for almost 30 years. I trade options, futures, stocks, forex, and crypto. I'm one of the foremost authorities on short-term day trading known as scalping. Scalping is the most cognitively demanding form of trading. It requires a lot of focus, concentration. When we have a 95% win rate system, it makes it really easy. I spend no more than 2 hours in front of the computer. If you want to find out more, go to elitetradersuniversity.com, go ahead and /apply, and you can talk with a member of my team and find out how you too can have a 95% win rate and be able to have a funded account using a prop trading partners, being able to trade 50, 100, 200, 400, even $1 million trading account using my proprietary system to help you. And you get to keep 85% of the profits. We just have a 3-step process. Step 1 is simulation. Step 2 is demo. Step 3 is small live trading. And then you pass audition, and then you are given capital to trade. 3 steps to financial independence right here, right now, Elite Traders University. You need to go to elitetradersuniversity.com. Accept no invitations. We'll see you there, okay? Let's go ahead and go to the agenda. We're going to look at the dollar index, euro dollar, pound dollar, Aussie dollar, the Forex majors, and we're going to look at gold, silver, of course, gold. All that glitters is gold, oil, and the S&P 500. But we're going to start with the economic news. I know a lot of people, economic news, Greg, but I tell you what, if you know the economic calendar, you have the key for the coming week and you know how to trade it. I call this fund with flags, okay? Fund with flags. So maybe you've heard of, if you watch Big Bang Theory, you've got the Sheldon, and Sheldon has a girlfriend named Amy, and they have this internet show within there called Fund with Flags, right? And it's really it's clever. I call our show Fund with Flags, right? Where we can actually make money with flags, right? Okay, so let's go ahead and get to it. Let me go ahead and move over here and move over there, and let's get right to it. I'm going to use my one of my favorite trading tools called My Market Heat Map. My Market Heat Map is a financial trade scanner. It's really an all-encompassing tool. 6 powerful heat maps. Right now, the market is closed. They're not closed, but it's not. The desks are not. The volume is very low. Remember, Forex is actually a 24-hour, 7-day-a-week market. However, it moves so slow during the weekends that it doesn't show up. Trading desks are closed, but the market never closes. We have an economic calendar on the front end. You can come right here, absolutely free, to mymarketheatmap.com. You get access to the economic calendar for absolutely free. You can access one of the 6 powerful Forex heat maps, absolutely free. I know you guys, there's freebies out there like free that provide value. And we also have this really, really cool, I'm going to, let's do this, right? Okay. I'm going to share our commercial with
$6.6 trillion are made every day on the foreign exchange market. And although you love a piece of the action, a lack of knowledge and experience has you wasting more time than you make. What if trading like a pro and making smart decisions could be easy? No scanning endless charts or analyzing confusing reports. No time-consuming research or unreliable social media hot trading tips. Quit the guessing game, avoid risk, and get the answers you need to make huge profits starting right now. With My Market Heat Map, a trade scanner that provides a complete overview of 28 Forex currency pairs, plus gold, silver, oil, commodities, crypto, and other major global market indices. Quickly and efficiently identifying profitable market trends and lucrative trade opportunities has never been easier. Simply buy in green, sell in red, and stay away from gray. Earn more, lose less. For a limited time, get a 7-day trial of My Market Heat Map for only $1.
There we go. So that's the My Market Heat Map. We're going to log in and we'll show you what's going on in the My Market Heat Map. We're going to start the economic calendar. You can start from the outside, but I'm going to go ahead and log into the heat map. We're going to log in and show you, I'll give you a glimpse of what's happening. We have charts, quotes, economic calendar, Forex TV, a financial news stream, market hours, technical analysis screener, national holidays, sentiment, currency correlations, Forex calculator, Forex liquidity, and Forex volatility, all in My Market Heat Map. We're going to go to one of the tools, the economic calendar. In fact, it's one of the top things I check on my list. Now, we have a partner that you want, if you would like to actually get into prop trading and you would like to be able to have some funds. If you have a system that works, remember, you have to have a winning system to actually pass these challenges. You can't, I want to trade $400,000. Yeah, but if you don't have a system, it's not going to work, right? It's like trying to be on America's Got Talent, and you don't have any talent, right? I had a student call me up, a potential student. He says, "Hey, Greg, can you teach me how to trade?" I go, "Yeah, I sure can." He goes, "Yeah, I passed a prop challenge. I have a $100,000 account." I go, "You have a $100,000 account? Why do you need my help for?" "Well, I don't know how to trade." "You don't know how to trade, but you have a $100,000 account." "Oh yeah, I was using some hot tips and things that I found online, and I was able to pass the challenge. And I'm up $4,500. You're up $4,500, and you passed the prop trading challenge. Why are you talking to me? You seems like you already have this down." He goes, "No, I think I'm going to lose all this money, unless I get your help to like teach me how to trade. So you're really putting the cart before the horse here, right? I mean, the cart is like way out the front. The horse is somewhere in another state. And so I said, okay, this is what you're going to do. Trade really small, use a small position size, trade the minimum number of trades you're supposed to trade, take that money out and invest it in your education, right? Good job. Congratulations. So I called him back a couple of weeks later and I said, hey, buddy, let's get started. You know, I know you probably you have to do your 6 weeks or something before you may make your withdrawal. So I know you got to get your withdrawal. No response, crickets. I go, man, let's go up to this guy. Call him up again. Send him some message. Finally, he picks up the phone. Oh, coach, I'm so ashamed. I go, why are you ashamed? No, you didn't. No, you didn't. What you did? What? Oh my God. What happened was he took a trade and he left it open and he never stopped. And he lost. If you fall below a certain level, they'll take your money, and you got to start all over again. And so that's what happened. He lost the money. He was already there. He passed the challenge. He had $100,000 account. He was up $4,500. All he had to do was trade like 0.1 or 0.01, and just kick it for like a couple of weeks. Trade minimum position size. And then you're home free, you pull the money out, you invest in your training, and then we teach you how to be a trader and how to keep this, how to manage risk, how to find entries and exits, how to screen, if you're getting signals, how to screen them for the best possible ones. And he did not. And hopefully you learn from that lesson that just because you pass these challenges, I've got people popping down $2,000 a month in challenges, but they won't learn how to trade. It's like, don't you think the worst thing is to pass a challenge, get a ton of money, and have it taken away from you, and you got to start from scratch because you don't know what to do, right? So I encourage you to get education first. Go to Elite Traders University. Come to our website. So even though this person, he's a young guy. He's a young kid, so I'm not worried about him. Young people are resilient. He'll come back and he'll definitely be a profitable trader. With my help. But for you, this is a lesson, a tale to learn from. That you just can't. You can't just have someone play. Take a mixtape. And we all know, if you're old enough to remember Nelly Vanilli, I don't remember, right? They had the song called Girl or something, and they lip synced it. Someone else sang the song, and then they, now everybody lip syncs. So it's like, but back then that was like a crime. You're selling all these records, and that's not even your voice, right? So even though they had the winning song, the song that actually would make gold records, people love that song. I was bopping that song too. But guess what? It wasn't their voice. And so guess what? They lost everything, right? So you can use other people's results to pass a challenge, but can you stay there? And that's what the real important thing to do is. I'm sorry to take a little bit more time on this, and but I know people, basically their focus has been challenges, passing a challenge. And the thing about it is, you don't want to pass a challenge. That's the worst thing psychologically, to have $500,000 that you can trade, and then within like a week, you lose access to it. So if you want to build a firm foundation, you want to build it on, build on the solid rock, building on information, building on knowledge, building on solid knowledge versus building on sand. And if you're doing these prop challenges without a winning system, then you are building on sand. And so the money that you're throwing at them, you might as well put it into something, because they can never take knowledge away from you. They can never take away what you put up in here. But when you have nothing in here and you threw your money, you lost your money and you have nothing up here. And so you're basically worse than someone who had money. At least if you had money, you would have the money. But now you have the money and you don't have the knowledge. If you put it in knowledge, you say, well, look, I will put it in knowledge, but nobody can take the knowledge away from you. But yeah, you have to look at the quality of knowledge. You want to have good knowledge. So you want to make sure that you're, learning from someone who's been in the trenches for 30 years might be a great idea, maybe a good idea, perhaps, right? Versus someone who's been on YouTube for like 3 years and they're like, oh, wow, I learned so much from my experience in 3 years. Not to clown the guys who are 3 years. God bless you guys. 3 years ago, I was eating dirt and trying to, spinning my wheels for 3 years. Then you guys are doing a lot more in 3 years than I did in 3 years. But still, I got a 27-year head start on you guys. And that's worth something, right? So anyway, I just wanted to encourage you guys to invest in yourself and not throw your money at these prop challenges. Making the prop challenge companies rich, right? They're driving sports cars and Lamborghinis and they're doing big advertisements. Why? Because they're getting you guys to throw your money at them, and you're never going to take it from them because you don't have the information, the knowledge base to actually do that. Okay. You may get ahead and pass a challenge, but will you be able to stay there? And staying there is what it's all about, right? Anyway, I really digressed on that one. Greg, you just went off on a tangent, right? So let's go right to the economic calendar. And let's go ahead and look at what's going on for Monday. That's coming up. I have to refresh this because we are not there. Let's go ahead and I'll scroll on down. All right, come on down, show more. 12th, 14th. Okay, we're gonna go to Monday. And Monday we're gonna start, and I use the economic calendar. Don't get freaked out by the numbers, the percentages, and things like that. Okay. I keep it really simple because I was a middle school teacher. So I deal with colors and shapes, very simple stuff. Okay. And people say, oh, you're too simple. I can't believe it's so simple. Your stuff is found on the internet. Why do we need you? It's like, that's idiot. That's why I've been doing this for 30 years. I can make it very simple because I've seen everything already. Okay. So I look at the flag, and this is the euro. It's a German flag, and Germany is part of the Eurozone. It's the largest economy in the Eurozone. Okay. So it's like our New York and Texas and California, the biggest states, right? Versus Rhode Island. Nothing against Rhode Island, but so if you see the economic movement of Germany, it's really going to impact the euro because that's the currency that they use. So they have an announcement at 2 a.m. Eastern time. Okay. So you said, well, Greg, 2 a.m. I was like, yeah, that's when they're up. Okay. Because it's it's a time zone thing. This is the European session. So the euro is set to move during that time. Why? Because we have news. Big institutions and things watch for this and position themselves really ahead of time. The euro was positioning itself last weekend. In fact, I think I'm short euro right now. Because it's expected. The first number is the expectation, or actually the previous number. What the previous number was, negative 0.2%. And expected to even, and this is the second number, or the second number from the right, tells you what the forecast is. The forecasters are guys who sit up in these different government agencies, and all they do is calculate stuff, right? They look at numbers and they quench stuff, and based on, they can extrapolate or predict or forecast or attempt to get, based on previous data, they forecast it's going to be worse than the previous number, right? So this number was for July, and actually it's for the previous number is for June. So this is June's number. They forecast July's number to be here. August is not done. So these are not August numbers. Remember that. All the economic data is backward looking, and we're trading based on backward looking indicators because it hasn't happened yet. Okay. But July is already in, and they're forecasting for July. So someone knows what July is. These guys don't. They have a pretty good idea because all of these reports are like sealed in an envelope, right? They're like the crop report in Trading Places. Clarence Beeks had the crop report. He's trying to get it to those, the Duke brothers, right? And Eddie Murphy and Danica are trying to get the envelope so they can know what these announcements are. And these are all these announcements all the time. There's Clarence Beeks everywhere. whether it's interns working behind the scenes or taking pictures, and they're giving data. And so they're all trying to game these announcements based on how strong they are. These are medium-term announcements, and I don't normally put those on there. In fact, I'm going to filter these out from the medium ones, right? I'm just going to look at the high ones, right? Not the ones that are high, but the high impact ones, okay? That gives us a lot less to look at, and now we can focus in on something here, okay? So the year ones are gone, right? So we have yen, we have this is a Japanese flag with the red dot in there. GDP growth rate supposed to rise from 0.7 to 0.8, and growth analyzed supposed to grow from 2.7 to 3.1. And normally I don't look at Japanese data because Japan, what they do is they try to weaken their currency in order to stimulate exports. But they usually wait until like October to do that. So in fact, this might even push the yen higher, which would mean that currencies like Aussie yen, pound yen, Swiss yen will drop. And so that is what this might actually impact the yen. Normally I don't look at the yen news, but the yen usually traditionally just gets stronger during this time of the year anyway. 9:30 p.m. we're going to have RBA, which is the Reserve Bank of Australia. See the flag, it's Australian flag. So that tells us that the Australian dollar is in play. And even during this early morning period or early evening period, we can actually start looking at the Australian dollar to see how big hedge funds are positioning. It means that this is the ticket to the party. This is what's going to be active. And we have Chinese data coming out later in the evening too. So this is going to be a New Zealand dollar, Australian dollar party. Why? Because Australia and New Zealand are the one, China is their largest trading partner. And usually Chinese news impacts their economies and the value of their currency very dramatically. So even though we don't trade the Chinese renminbi, when we see that red flag with the hammer and sickle there, we can look at the Australian dollar and the New Zealand dollar as possible proxies that there might be some big moves that are going to happen there, okay? So we have the minutes are basically, whether the hike rates or cut rates or last time, I think they kept them unchanged. And then they're going to put the reason why that they did that, and that's the minutes. Basically, minutes of the meeting. Like what they talked about, and so they can look at the minutes and see were they bullish, or going to be bearish, or hawkish. I'm sorry, hawkish or dovish. Hawkish means they want rates to go higher. Dovish means they want rates to go down, or they might have a neutral bias where they want to keep things steady until they get more data points, right? Now, ordinarily, all the central banks around the world have been tightening, and so that has seen the different currencies rising. However, the U.S. dollar is rising as well, and when the U.S. dollar is rising, these other currencies it's hard for them to go up against the U.S. dollar, right? So, and then also seasonally, the dollar is up during August, September, and I did a whole webinar on seasonality, and you should come to my Thursday webinars, and actually you can learn more about that in our Thursday webinars, which are really cool to be part of. In fact, I'm going to bring that REG. We're actually, we talked about seasonality last time. This time we're going to talk about the power of candlesticks, how you can illuminate your trading. It's going to be Thursday, August 17th at 8 p.m. Eastern time, 5 p.m. Pacific time. You can register for this event, right? And we'll talk about that. But if you missed the one that I did on seasonality, you can go to Forex Baby Steps for just $7. Go ahead, and it's a one-time payment of $7, and you get access to all the previous Bulls and Bears, the Bulls and Bears newsletter, plus the only place where you'll find the recordings of our Thursday Forex Baby Step webinars. Okay. All right. So moving right along. So the Aussie dollar is going to be in play here. The next currency we're going to be looking at for Tuesday, August 15th, we're going to look at the pound, which is the UK. That's the UK flag, United Kingdom. And so we're going to be looking at the claimant count change, which is the number of people who have jobs. And we see that's going to actually drop from 25,000 to negative 30,000 people losing their jobs. And usually when you hike interest rates, it reduces job growth because people, companies that borrow money to support their investments, they no longer can borrow money cheaply. They start laying off workers. Those workers can't buy things, and then those things go down in price because there's no people can't afford them anymore, right? Because they don't have a job. So I know it sounds kind of cruel, but that's how the system works, and that's why you should learn how to trade so you're not part of this system, right? You need to unplug from the matrix that sucks your value out and kicks you out when they raise rates. Unemployment rate's supposed to remain unchanged at 4%, but believe me, the central banks would love to see this tick up to 5 or 6% in order to have less people buying stuff. Next, we have at 5 a.m., we have the ZEW Economic Sentiment Index. Remember, I told you that's a German flag. German economy is supposed to actually get better from negative 14.7 to negative 14.4. Sentiment just takes a poll of with how people feel about that, about the economy. If they're pessimistic about the economy, then what will happen is we would see maybe a bullish move, a bearish move in the currency. This actually, it's both are negative. This is less negative, so it might be slightly bullish for the euro. 8:30 a.m. starts the North American news cycle, and we're gonna have the New York Empire State Manufacturing Index. Empire State, that's the nickname for New York because they have the Empire State Building there. And it's supposed to drop from 1.1 to negative 0.5. And actually that negative US economic news is what people are looking for a stock market rally. I know it sounds weird, but it means if our economic numbers are positive, it means that the Fed is not raising rates high enough, because right now, when the Fed raises rates, they're actually putting the brakes on the economy to slow it down so it won't overheat and create higher prices. So in order to lower prices, they have to slow economic growth. So anything seen as positive economic growth is actually bad for the stock market, right? Now, this all plays out, but seasonally, the stock market is down in August anyway. We talked about seasonalities, right? So retail sales month on month supposed to rise from 0.2 to 0.4, right? Because we got summer. We're talking about the previous number for July, for June, and then for July, supposed to actually rise. You got summer stuff, right? So what I would look at trading the euro, because the euro is considered the anti-dollar, and so we can see the euro actually dropping in response to a stronger dollar, right? Stronger dollar would imply that the Fed will raise rates as the U.S. Fed starts to hike rates. It makes the dollar stronger, and it makes the stronger dollar allows it to be able to purchase more overseas, but by buying exports, but it also makes it stronger versus other currencies as well. We also have a ton of Canadian news coming out on Tuesday. So the Canadian dollar being played. You'll notice how the maple leaf, if you can't see it because it's kind of small, I can enlarge it. And you can see that we have this the maple leaf fair core inflation rate month on month. And I have to make it smaller so I can see the actual numbers. Okay. Right. And it's supposed to rise from negative 0.1% to 0.5%. And year on year, CPI is supposed to remain unchanged at 3.7. So all these are inflation numbers out of Canada. And so we're seeing that inflation is heading higher in Canada. But, if you pair CAD versus maybe Swiss or CAD, the Euro CAD, you might see the CAD actually strengthen against other currencies, might not do so against the yen, might not do so against the dollar. So in this kind of environment, we might see CAD be strong against certain currencies, but weak versus others. But the inflation rate is very rising. Inflation in Canada would usually mean that they would need to hike rates more. Just we haven't seen much movement in the Canadian dollar when their central bank has raised rates, which is kind of a puzzle. And I don't like puzzles, so you want to maybe monitor this, but it may not be. Look at price action as let price action be your guide, right? Now at 10 p.m. we're going to have the interest rate decision out of New Zealand, and RBNZ stands for the Reserve Bank of New Zealand. Got the New Zealand flag. Kind of looks like the Australian flag, but I think it's one or two less stars than the other one. Let me know in the chat box how you tell the difference between the Australian and New Zealand flag. They're widely expected to keep rates unchanged at 5.5%. And that probably won't move the needle on the currency. It might be very volatile while this announcement is coming out at 10 p.m. I like it that it's coming out at 10 p.m. Usually it comes out at 5. You can't do anything with it. So it'd be very interesting to see. Of the dollar strength, though, I think any strength that we see in this will be favorable, something that we can trade against. But typically, in the normalization of rates in New Zealand usually has like 7.5, 8.5% interest rates. So, normally their interest rates are higher than the rest of the developed world. And they have a press conference at 11. So this is going to be very active for the 3-hour window here. Wednesday, we're going to go to more UK data, more inflation data coming out. 0.2 to 0.3, a rise month on month. Inflation rate year on year is supposed to drop from 7.9 to 6.8. Inflation rate month on month supposed to fall from 0.1% to negative 0.5. Core inflation rate year on year is supposed to drop from 6.9% to 6.8. And so, anyway, if you don't understand the numbers, look at price action. You should be able to, like my guys in mentorship, they're able to know the count, the wave count. They're able to know when institutional order flow is coming in. We can use a predictive function to get in and out of the market. So, this is like basically giving money away for free here during this time period. And I'll post some things in social media, let you know what they're actually doing. So 5 a.m. we're gonna have the Eurozone. You see now, this is the European flag, the entire union. So like our flag has 50 stars representing the 50 states. They have stars and on a blue background representing the entire union. And they're gonna have GDP for the entire European Union. It's supposed to rise from 0 to 0.3. And GDP growth rate year on year supposed to actually drop a little bit from 1.1 to 0.6. So the euro will be in play. And that will be a great trade, even into, but we do have FOMC minutes that same day at 2 p.m. And FOMC minutes, a lot of traders don't like being in the market ahead of this. So you might have a lot of inflation data coming out on Wednesday. We might not see a whole lot of movement after that going into the FOMC minutes. 2 p.m. is a long time. Europe will be closed. And so the market might be kind of flat on Wednesday. So you're like, why is the market flat on Wednesday? Well, just remember FOMC minutes, they released the notes of their meeting, what they talked about during their last hike, or the last announcement. Now at 7:50 p.m., almost 8, we'll have a balance of trade out of Japan. It's supposed to drop from 743 billion to 24.6 billion. And then at 9:30 p.m., we're going to have a lot of Australian data, Australia employment change, employment rate, full-time employment, a lot of employment data coming out, all that's looking a little softer, right? And so around 9:30 p.m. on Wednesday, don't start trading the Canadian dollar. Canadian dollar is my favorite. I want to trade it. Well, guess what? The market doesn't care. It's Wednesday. The party is going to be in Australia. Look at the flag. The flag tells you what to trade, right? They might even can trade New Zealand dollar, right? And you might be able to look at those two currencies. But this is where the action is going to be. So if you're in Canadian dollar or Swiss franc, and it's not Aussie Swiss or Aussie CAD, and nothing happens that time. Well, I traded this and I don't know what happened. Nothing happened. I mean, I was telling this guy one day, I was like trading pound dollar. I'm like, I'm going to trade pound dollar because there's pound dollar news coming out. And the guy goes, well, I was trading Aussie. Nothing happened. Really? Because the flag wasn't the Australian dollar. It was the pound. But I like trading Australian dollar. The market doesn't care what you like, right? So the economic calendar tells you, shouts at you, what's going to be moving, right? What's going to be too volatile? I don't want to trade it. Well, then you're going to sit around and do nothing then, right? The thing is that what this is showing is hours before and an hour, 30 minutes afterward, this is going to be a party. So even though I don't advise you, if you don't have a pip and run system or Forex power trader or any of the gold flipper strategies, if you don't have any of my strategies, I wouldn't trade this either. I would use your money to trade this. However, you can do so maybe like 30 minutes to an hour afterwards. This is where the action is going to be. And if you're in anything else, it's probably not going to move and you're just losing money. Okay. And even a couple of days before this announcement, like if you look at Tuesday, Australian dollar could be or is in play because these people are building positions into going into this. They're not building their positions right here. They've already built their positions a little bit earlier. So you want to look at the whole calendar and see, okay, so Monday you might look at the pound, you might look at this, you might say, okay, where are these? Right? And as they're adding to it, they don't want to alert people that they are doing it. So they're going to like flatten the market or spike it up and spike it down, or start building slowly and then selling off and building slowly, building the position slowly as to not draw any attention to what they're doing. But we know what they're doing, right? Okay, so we had initial jobs claims at 8:30, supposed to drop from 248 to 240, which could be actually bullish for the U.S. stock market as they want people to lose jobs, right? Actually, jobless claims. Oh, the jobless claims fall. These are claims, right? Claims are falling. So it might actually be bearish for the stock market, right? I know, does this sound kind of, anyways, whack. Inflation rate year on year in Japan supposed to rise from 3.3 to 3.4. But then you get retail sales out of the UK. Most modern economies rely on sales. Like 80% of GDP is consumerism. And so if we see that decreasing or increasing, that's going to have a big impact. We see this is, a drop from -1% to -2.1%. That could be bullish for the UK stock market because look, people can't afford stuff anymore. Things are too high, they're dropping, so sales are dropping. Sales drop, prices drop, supply and demand. So that could be positive, right? And then retail sales month on month is supposed to fall from 0.7 to -0.5, shows that their aggressive hikes are working to lower sales, put the brakes on the economy, slow things down to lower inflation. CPI, Consumer Price Index final out of Europe, supposed to actually drop from 123.5 to 123.4, which means that the central bank may not need to raise rates and the euro could weaken on a number like this. Then we had inflation rate year on year, supposed to fall from 5.5% to 5.3. Inflation rate month on month, supposed to drop from 0.3% to -0.1%. And core inflation rate year on year finals supposed to remain 5.5. So showing that we are that the ECB is making some traction against inflation, right? So that's all for that week. It's going to be an exciting week of announcements. The euro is in play, the pound is in play, Aussie is going to be in play, Canada, the Canadian dollar, and we can also look at the euros, the anti-dollar as well. So let's get into the charts. I know you guys are like, okay, enough of the economic stuff, Greg. Can we get to the charts? And I go, yeah. And I'm going to start with a 50,000-foot view, the monthly chart of the dollar. And you're probably saying, Greg, why are we looking at the 50,000-foot view? Why are we looking at this big time frame? We know we trade this time frame. The thing about it is that the higher time frames influence the lower time frames and give us a bias, we have a bias, a trend bias based on, based on what's going on in these higher time frames, right? So we have a higher time frame where we'll be making higher highs and higher lows. We have an uptrend. So the uptrends, the green candles are more of those green candles than red candles. It shows us that the bullish trend is very strong, right? And we're actually going to do our Forex baby steps. We're going to do our webinar. Our weekly trading webinar is going to be on Illuminate Your Forex Trades with Power of Candlesticks. And you can go over to elitetraderslive.com/reg, REG. Again, elitetraderslive.com/reg. And you can register for this free event. And what you're going to discover in the free training, demystify candlestick patterns, gain a deep understanding of the most influential candlestick formations and what they signify in the Forex market, real-time analysis techniques, learn hands-on strategies to interpret live charts, identify trends, and make informed trading decisions using candlestick patterns, minimize risk, maximize profit, and discover how candlestick analysis can be a pivotal tool in managing risk and optimizing your potential for returns. And then it's going to be interactive case studies, dive into real-world Forex scenarios where candlestick patterns have proven to be game changers and understand the logic behind each trade. And then you have expert insights and Q&A session, and you get to engage with me and I can answer your questions. I'm also going to tell you that I no longer use candlesticks anymore, which is going to be a complete surprise. So if you want to see what I use, come to the event. Okay. So we have higher highs and higher lows. We had a trend line break, and now we had a force down to the bottom when it was thought that, hey, inflation is down. We're going to, so this we have what we call a Pinocchio bar, because you never trust a wooden puppet for their analysis. He was telling a lie, he had a long nose, price snapped back up. And so now we have usually price is very strong against the wick, right? So this wick was a full body red candle. Buyer stepped in, forced it up. And again, I'm not going to give away my webinar for candlesticks, but this is what it looks like when we drop down to a weekly time frame. So now we're at a 25 or 10,000 foot view of this market, and we're looking, and people like saying, "Yeah, I want to short the dollar." It's like, you want to short this? This is not shortable unless you short on a shorter time frame. But the trend, what's trending is this is green and buying, right? Higher highs and higher lows, right? And we drop down to a weekly chart. There's 4 weeks in a month. Well, there is 5 days in a trading week, and we can see that higher highs and higher lows. You could have made money on a wick. You went short. Yeah, trend line break. Oh yeah, trend line break. Yeah, trend line break my butt. You got crushed if you stayed in too long, right? We have higher highs and higher lows. Structurally, this is a trend, an uptrend. So there's there's more green than red. That tells us that someone asked me like, "Hey, Greg, how do you know that the dollar is going to keep going up?" I mean, I don't know for sure. No, nothing's absolute 100%. But based on this probability, green, little red, green, little red, little red, I'm probably more in tune to go short here. I mean, go long here. Just like when we were going through this is, again, these are days of downward movement. I'm sure that there was some upward movement in there, but you don't see it on this chart. Red, 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 just simple colors and shapes. I was a teacher. I keep everything really basic and very simple. And people say, it's not that simple, Greg. Yes, it is. You want to make it complicated because you want a job and you want to seem valuable and you want to have prestige. And if I break it down to colors and shapes, it takes away your prestige and how smart you are, because most of the really successful traders are actually high school dropouts, actually. But they won't tell you that either. All right, let's drop this down to a 4-hour chart. So there's hope for you if you're a high school dropout. This is perfect for you. I taught middle school kids how to do this, and I actually had one dropout. No, I dropped out of college, right? Millionaire too, right? Okay. And then so we have an upward trend channel, higher highs and higher lows. Yes, you could have made money here, but look, you're swimming against the tide, right? I'm not talking about the I'm not talking about the soap either. The Tide detergent, the Tide pods. Don't you like those pods? They smell really good. I throw them in my garbage disposal, and they make your garbage disposal smell super fresh. Okay, lower swing highs and lower swing lows, and then boom, double bottom at the 200 moving average, and boom, we're rocketing up. So we can see the same high, 102.91. He said, well, Greg, we don't trade the dollar index. Bulls versus bears. I'm pro dollar, long dollar, go USA. The dollar is heading to the moon, right? So Greg, we don't trade the dollar. How do I trade the dollar? Well, if you know how to trade the dollar, then you know how to trade the other 6 currencies, right? Because the majors have the dollar as their quote currency. The currency are quoted in terms of dollars. So let's take a look at the anti-dollar. It's called the anti-dollar. I didn't create that up. I didn't make that up. We call this the anti-dollar, right? All right. Not your aunt who's, no, I'm not going to go there. Anyway, here we go. Here we go. I'm going to remove all drawings, start from scratch. Here we go. Here is a monthly view of the US dollar, a big giant picture of this. So let's get a whole view. This is like a satellite view, orbital. We're orbiting the Earth, and this is what we're looking at. We're looking at this view of the euro, versus the US dollar, and we can see this movement, right? It's kind of like trending. It was trending up. And then we broke a trend line, and we started trending down, and then we're trending up again, and we have new, and then we broke a trend line, we broke this trend line, and then we broke that trend line, right? So I'm going to draw these trend lines. So we had that trend line, right? That broke it. Then we had another trend line, right? And then that was broken. And now we have another trend line as well, right? So we're breaking these, what we call speed lines, right? We're breaking it. We went volatile, be very volatile. We're breaking, and we can draw more where price is just breaking down. It's making ups, but it's not making new highs. And so we're getting this like we're just fanning down, we're just breaking down, looks like it's gonna be bullish for a bit, and we're just breaking down. Euro can't catch a break as it continues to trend down, right? And then there's probably going to be one more. If we can take that low to this one, we got probably one coming in like that, right? Right. And so we're coming up on support as price continues to break down, right? We have old support at 83.37, and we're touching a old trend line here where price broke the line, rallied. Right, we're rallying against this other trend line. Old trend lines become support lines, right? And so we didn't even, with the 200 act as the trend line as well. Boom, rally, drop, stare, right? And so now we've rallied against that line with a bearish move, right? And then we can have another line. We can actually take lines. We can take lines within lines. It gets kind of nutty. We go, but that's the line I'm looking at right there. I'm looking for a break south as the dollar continues to rally, and I'm looking for where's my arrow? Where are the arrows? The arrows. Arrows. And like we had arrows here. I had an arrow function here, and now the arrows are gone. Did this one? Yeah, the arrow. There it is. Okay, I'm like, gosh, they moved them, right? So we're looking for a pullback. It might not even go that far, maybe halfway, right? Because I think we rally. I think we do get a rally. I think we get a pullback. Maybe down to the 618. Look at that, 102.05. I don't think we get back. I think we actually, when the Fed stops raising rates, we'll see a lot of these actually shoot up. We'll see the Bitcoin shoot up. We'll see pound dollar. But right now, seasonally, we talked about seasonalities, and seasonally we have a negative bias on the euro and the pound and other things, right? So I'm looking for, we got shooting star up against the old trend line back here, and I think we head down from here. So bulls versus bears, I am bearish the euro. I'm walking down. There's our 3 drives pattern, 1, 2, 3 drives against the trend, and we can see a move coming down from there. So, and we can look down to a daily, and we can see we're just barely trying to bounce off this trend line. Trend line, I would like to see a bounce from the trend line. I can get short. I'm not, sell high like Snoop Dogg, sell high, buy low, right? All right, moving right along, and we go down the 4-hour chart. So you can say we might even have a bounce Monday, maybe a bounce Monday, but we might just break right through here and keep going down. All right, let's move on down to the GBP USD. Very strong currency, but it's been pulling back some against the trend after a meteoric rise. We can see big long wick, right? Monthly chart, you can see that, after that, I call the King Charles bounce. We bounced solidly from a level of support, that 106 area, and basically we have a making of a double bottom here on a monthly chart. A monthly double bottom is like tremendously huge, right? Huge. Like you wouldn't believe it, right? And we can see a move back up to the, that's our typical double bottom target. But you can there's significant gains that can be made along the way from a Fibonacci point of view. We can look at maybe up to even 144, but not now though, right? We have this downtrend that we're working with, and we have dollar strength. When the dollar strength is finished, that's going to be a way for us to get into the pound dollar at a discount and be able to hold it for, to trade with a bullish bias. Right now, we have a negative bias, so bulls versus bears. I'm basically short-term bearish, medium-term bearish, but longer-term bullish. Because there's even talk that the Fed will actually cut rates in 2024, and that would, cause the rates to rise. And also, but we can see a seasonal pullback, typical seasonal pullback that we'll have going into September, October. And it's like it repeats itself. What does seasonal mean, right? Seasonal, you really need to watch my video on that. But we get a typical pullback that might last several weeks, right? Because that's normally what happens. And then after time, after that season, people will come back. There are selling may go away. They'll come back, into the currencies. October 31st, like Halloween. There's all kinds of weird stuff around that. I won't go into that in this broadcast. But they move their money to U.S. Treasuries, right? U.S. Treasuries, like a piggy bank, right, is where you put your money to be safe. It's like having a tornado shelter, someplace where you put your money while it's safe. It won't earn massive gains, but it's safe because the U.S. Treasury market is the deepest, has more liquidity, has safety. So people around the world who are on vacation now move their money into the safety of the U.S. dollar in the form of bonds. Okay, bonds are like U.S. dollars, like Chuck E. Cheese tokens, and the bonds like Chuck E. Cheese machines. You can't put quarters in a Chuck E. Cheese machine. You have to have the coin. You have to have a token, right? And the dollar is a token to access that safety. And that's why the dollar rises during this time, right? Or times of economic upheaval, disasters. Even when disasters happen in the United States, the U.S. dollar is where they run to, right? Which is kind of odd. Again, my prayers are out to the people of Maui. I spent a lot of time in Maui. Blessings to the Bella family and to the Sherman family and to the other people that are there that have touched my life. Make sure you guys look at the different places where you can donate and help out the people, the victims of the fire in Maui. Okay, thank you. So we get the pound going down to a daily chart. We can see pullback. It's just, it's just pulling back against the trend. The overall trend is up. However, we get these pullbacks. They are tradable, and we still have the big dollar on, very strong, right? We might even see little rallies, but you see the rallies against the trend or against this downtrend, this intermediate term trend are weak, right? We got a rally and a drop, and a rally and a drop, and a rally and a drop. The drops are stronger than the rallies for now. We also have a formation of possibly a bearish head and shoulders pattern here. I'm just seeing that. Like shoulder, head, and this is a bearish pattern. And we're going to talk about that's probably a good topic for our Thursday webinar. The patterns. Yeah, patterns. Yeah. Okay, we'll do that. Okay. So that's a bearish pattern, and we look for the pound to actually drop. Okay. Moving right along, let's keep it going, keep it spicy. I want to look at the AUD, USD, Aussie dollar, and we can see I'm going to start our monthly chart, move all drawings, and we can see that we're coming down low. And I actually remember I told you guys that I'm short. I've got an actual short trade. We're actually up, a couple hundred pips short, right? Why? Because the dollar seasonally is down. So why don't I go long dollar versus Australian dollar, right? And so we can see a nice little candlestick pattern, an evening star. Evening star pattern is a 3-candle pattern where we have a small, large green candle, small bodied indecision candle, and then a red bearish candle. So we call it a bearish evening star. Evening meaning like evening is dark and dark goes down. If it was a morning star, it's a morning star pattern. You notice how the patterns don't really tell you how far they go. It's like, reversal pattern. Yeah, they reverse very much. Reversal pattern in a downtrend. Good place to short, right? So this is this is a monthly evening star. So maybe it goes down. We can look at the next level of support, significant support. I mean, you have support right there. We got the real support. We look down there, right? And we have a rally and a drop, so we can actually take a fib. And also, if you join Forex baby steps, there's something else I want to say, but I can't say it. Violation of copyright. As so here we're at 618. This is a Fibonacci of last resort. So you can imagine people going, yeah, man, Fibonacci, man. I saw the Fibonacci webinar and I saw a reversal candlestick pattern at the 618. I'm going to get long. And you made a ton of money on this long. Don't get me wrong. From 60, 64, 63 up to 71. That's 600 and something pips. That's nothing to sneeze at. If you thought it was going to go to the old high, you have another thing coming. This is a bearish, a bullish move in a bearish downtrend, right? And this could go much, much lower. And we're challenging the Fibonacci, one of the Fibonacci's of last resort, the 618. You start getting to other Fibonacci's of last resort, like the 786. The smooth jazz channel Fips, the 78.6 FM and 88.6 jazz, smooth jazz. Right, smooth jazz. Feeling down, going down low. On the far side of your FM dial, 88.6, right? So this is bearish. Looking down the weekly chart, we're stacking not just 3 black crows or 3 black soldiers. We're moving down, moving on down. George and Wheezy, moving on down. All right, and the daily chart continues to trend down as well. And we got a double top right there, which is pretty bearish. So we got a lot of things telling us that dollar is large and in charge right now, right? With a 4-hour chart, and we always want to sell strength. So we see some strength, we want to be able to sell it. If you sell here, chances are it'll go up on you and you get stopped out. You go, Greg, man, you said I should sell it. I didn't recommend anything. Everything I do is for entertainment, educational purposes, but I would rather sell high and buy low. If you remember one thing I'm telling you, remember to sell high. Don't sell low. Sell low is a sucker's game. All right, moving right along. Let's look at the USD JPY. That's one of the JPY currencies that we can look at, looking at a monthly chart. And you can see that this is tearing up it's just higher and higher. People are like, oh yeah, it's dropping, yeah. You have a country that depends on exports. They have to have a weak currency. If their currency gets too strong, their economy will blow up and the whole world will go into some type of recession. That's how serious this is. People don't realize that they're 200% of GDP. That's how much debt they're in. So they have to keep they're addicted to this type of price action, weaken their currency. So we weakened our currency during pandemic, right? And we saw how our stock market is up. They have been doing that for like the past 30 years, right? They've been doing this for a really, really long time, right? They had to do it, right? They've been weakening their currency for a long time. Their currency got too strong. It created a financial disaster. And guess what? Ever since then, it's been rallying higher, right? Weaker. The yen's been getting weaker, right? And looking at this pattern, this inverted head and shoulders, we probably will see the yen weaken all the way to this area here, right? Over time, won't happen right away, right? So bulls versus bears. I am bullish. The pound versus US dollar yen, right? Weekly. I don't even have to look at the other charts. Walk them down. We can walk them down. It's like, this was like a freebie. It's like, really? And really interesting too, as I look at the dollar yen, and this is something I talked to my winner's circle. My winner's circle is a group of traders that they pay me a lot. They pay me a lot of money for me to trade with them like 3 days a week, right? So they've been getting some tremendous results in the market. And so with those tremendous results, just lots and lots of wins, tons and tons of wins, right? We take lots and lots of trades, and we have a lot of fun. Yes. Oh, where did it go? Where did we go? Back. Get back to the chart. Okay. Yeah. So what we did was we compared dollar yen to gold, and we found that they go in the opposite direction. When this is going up, gold is going down. All right. So we found a really good correlation there. All right. But let's keep going. We looked at let's look at Canadian dollar, because we do have Canadian news coming up. And let's kind of pair it versus the dollar. It just seems that after this bottoming process we had here on the monthly chart, that we were, looks like the Canadian dollar was strengthening, but now we've got what we call a flag pattern. I think it's flagging out, and we have a flag pole from here to here. And so if we get a breakout here, cloned like a sheep, we look for, we could look for this to continue moving higher, right? And then we take a price target. We can take a horizontal line, like a price target here. We can see that we could continue to move up. We do have a double top here. And, we can see our triple top maybe at 40, still a long way to go, 46.87. That's 100 and like 112 pips away, right? More than that, it's 1,000 pips away. Okay. So I'm bearish on the Canadian dollar, but bullish dollar CAD. Okay. And we can walk it down to a weekly, and we can see that our bull flag bouncing off the 200 simple moving average on the weekly chart, very strong indication that prices could at least continue to this old channel high. Channel high comes in around 137.82, still 300 pips away. Could be a possible something I'm going to take a look at for sure. Look at a daily chart, and we can see that this we have it like a downward sloping channel, but the overall move of the market seems to be higher highs than lows. In fact, we get right to that trend line exactly and bounce from there. Okay, now let's take a look at we looked at those currencies. Let's look at gold, XAU, USD, and we're looking more at gold and looking at our monthly chart on gold and move all drawings, and let's take a look. And it seems like we've been moving sideways, right? After we hit the high around 2180 or so, or 2080. Yeah, 2080. And then so now we were coming back, and so we're looking at this, the weakness coming in, against the US dollar, where we're trading 1913.83, and we got as high as like 1970 earlier in the day, dropping down the weekly chart, and you can see we are making a lower high and a lower low, and so we're looking at a possible, if we break this trend line, we could see we have a head and shoulders pattern, a bearish head and shoulders, right? After tagging these highs, we have a right shoulder, right? We have a neckline that's being challenged, right? And we can do a measuring objective from the top of the head to the neckline, and we can clone it like a sheep, and we can take that, project it from the breakout point, and we can get a possible target. Our target comes in at 1689.73, really very close to this old low that we had back in 2022 in September, right? We can also use Fibonacci expansions. There are a lot of different ways we can, skin this cat in order to, right? 1.618, 1691.18, typical target. 100%. Look, the 200 simple moving average and the 100% expansion come in at 1804.34. So you're talking about like 113 pips, right? Or $113, right? And our stop, we can have a really good risk to reward on this as well. If we take it short, that's why I love this gold thing, right? Or we can have a pretty good risk to reward above our high, and we can look for the 1.61 expansion, and we can move this out of the way. And we can have a very good 3-to-1 risk to reward ratio for something like that, right? For gold. So bulls versus bears, I'm not bullish. I am bearish on gold. Looking for the dollar to continue its strength. However, once we finish it, maybe as low as 1622, we could see gold back above 2000 again. Okay. All right. Let's take a look at another alternative asset. We're looking at y'all, BTC USD. And here we go. Monthly chart, remove all the drawings. And you can see that we are holding this range, this 30,000 level, 31,000. It's kind of, we've got this range that we've been locked in, right? Actually, the bottom of the range is down around 15,000, right? And we've been locked in this range for a really long time, right? We bounced, it came up, And it looks like we can come back and retest that range again. I know many people are looking for a breakout above this area. If we go down to a weekly chart, we can see that we have a 3 drives pattern, which is a pretty bearish pattern, right? But Greg, it's going up. Yeah, 3 drives up is bearish, right? It's, we're going to talk about that patterns, chart patterns. We're going to talk about candlestick patterns. So our next webinar, we're going to tune in. We're going to be talking about chart patterns. Some of the chart patterns I look at when we trade the markets, right? And we can see it on this 3 drives pattern in Bitcoin, and and everyone's talking about Bitcoin, and there's different things, litigation and things going on with the SEC. Is crypto a security or is it a currency? There's been fights back and forth, but based on what this looks like, I think they're going to rule it as a security, and everything's going to sell off, and then we'll probably hit back down to the 15,000 area. And they've been holding, the Fed's been holding this in this range to wear out the Bitcoin holders, the hodlers, because they're going to say, oh, wow, we're going to get up to 100,000, no, we're back down here again. There's definitely some type of manipulation going on, not by some whale, or the biggest whale of all is the United States the Fed. The FOMC is the biggest whale there is. Why? Because they can print as much money as they want, and you don't have enough money to outlast them. So what they do is they've learned how to control and keep this in a range in order to create price stability, and people lose appetite for Bitcoin and go to the dollar, right? So this will probably continue to go from 30,000 down to 15,000, 15,000 to 30,000. And it might take a band of billionaires or trillionaires, billionaires getting together, breaking out and hitting some stops and triggering this higher. Now, mind you that we had 2 bankers at Chase Bank, JP Morgan Chase, which managed to manipulate the entire gold market for 11 years. 1 bank, 2 traders controlling the whole global world, the whole global gold trade, right? So can you imagine that if people if one group, if 1 bank and 2 traders can control gold, then the United States government and all their firepower can control Bitcoin, right? So that's the very, very the very interesting thing, that we can control gold. They've just learned how to do it. And the way they're doing it is this, right? I'm trying to find the article. Yeah. So these guys, they basically controlled. I can't read the article, but these guys control the entire gold market. Right. All right. Okay. And so by doing that, and basically they can control, basically they're buying low 15,000, and then they make money, right, driving it up, but they take the money that they got, the Bitcoin that they made, and they wind up selling, using that same money that they bought to sell it back down, and sell it back, buy it up, sell it back down. And so it's constantly, this could continue for many, many years, as we can see that they've done it before, right? But now they're, the swings are a lot. So I would look at the bulls versus bears. I would look at actually selling this at this area, looking for a move down. Okay. Hope you found that helpful. Tell me what your thoughts about that. It's like, Greg, I think you're full of crap. Well, then great. Let me know. All right, let's take a look at, now we're going to look at NASDAQ, the NAS 100. NAS 100. We're going to look at the NASDAQ, the tech stock. Tech-heavy NASDAQ has been having some pullbacks against the trends. We rallied up to a high, a bearish head and shoulders. And, kind of season, we didn't quite get to the old high of 16.25, 16,725, kind of a pullback. and I think we continue to go lower. And but I think short term, we look at a sort of short term bearish. But I think we, once we get past October, we'll be back above the highs and maybe even beyond that, especially if the Fed decides to cut rates. So bulls versus bears, I am bearish NASDAQ, I'm bearish S&P 500. So you're late to the party, Greg. It's like, no, I was ahead of the party. I was in this long and telling people about this move on every bulls versus bears, since back here when we broke the trend line. I said, look, you got, well, they're like, well, the market's going to crash because of the inverted yield curve. And now they're telling you, oh, let's get in the market now. And right, they're always, there's the machine is always trying to get people on the wrong side of the market, right? In fact, you can go to my market heat map, and one of the tools is a sentiment index, sentiment indicator. And we can actually look up currencies and how people feel about them. And usually they're wrong, right? So we look at instrument, and if we look at something like Bitcoin, usually losers pay winners, and you need lots of losers to pay the winners, right? 73% of people are long Bitcoin. 27% of people are short Bitcoin. Remember, you need a pile of losers to pay the winners. So this is what we're looking at, right? I know it doesn't sound fair, doesn't sound Aussie dollar, 73.67 people are long, 26.33% short, right? Losers pay winners. So if you're long, you're probably wrong, right? And so there's a whole, lot. This is a tool that's part of my market heat map. It's my Swiss Army knife for trading the markets. Has a series of tools, tutorials, also different types of scanners and my heat maps, all available to you for a very low price. It's 50% off. Let's go ahead and click the link, my market heat map, and it should be right on the page. Okay, with that said, S&P 500, I want to look at oil. Oil is going up because you've got some weird stuff going on in the Persian Gulf, the Straits of Hormuz. You've had the Navy going out there. The Iranians are attacking oil shipments, and usually that drives up the price of oil. So you have a bunch of things going on there in oil, plus reduction of supply by OPEC, all kind of working together to increase the price of oil, right? And so we've got a similar almost pattern that we had on the S&P 500, where we had a trend line break on the monthly chart, got into the 60s. We bounced off a significant Fibonacci area, and now it's just cruise control, 50% retracement, bounce off this area, looking for a move back to the old highs, about 125. Not because there's a kind of great demand. The economy is kind of moderating. We don't have the Chinese demand coming in very strong because of housing. China's having not housing, but commercial real estate bubble that's bursting, and they're navigating lower domestic demand. So they don't need as much oil. If your people aren't buying stuff, why do you need oil for? Oil's used for packaging, even though people are like, you need to get off of oil. Plastic is made out of oil, so you get rid of all the oil. We don't have anything made out of plastic. We're gonna have a problem with that. Last thing I know that skins of animals aren't being used for storage anymore. Okay, so you cannot get rid of oil altogether because it would create an issue. But our environmentalist friends have not figured that out yet. Okay, so with that, with the lower demand of oil, plus everyone is so green conscious that you have shortage of labor in the oil market. People don't want to work on pipelines. They think, well, I might lose my job because everything's going electric. Au contraire, it's going to be a long time before that, But meanwhile, with the less people available to work in the oil fields or work in the oil patch, that means there's a shortage of labor, raises prices, raises the price of oil, reduces supply. And if demand remains the same, but supply goes down, that creates higher prices for oil. So you have a perfect storm of environmentalists and Iranian attacks and also OPEC cutting rates, and then a Black Sea shipments being attacked by Ukraine, right? Because Ukraine is attacking Russian oil. If people don't buy Russian oil, then Europe usually buys Russian oil, but then they'll want to buy Saudi Arabian oil or North Sea oil, the oil that we normally would buy. Well, then now that creates more demand and higher prices too. So you can see how all this stuff is interrelated. And if you know that stuff's interrelated, then guess what? We're not selling oil, right? It's a no-brainer to buy. When you are educated and you know about these types of things, well, great, I don't know these things. Well, then don't trade. If you don't know, why are you trading something you don't know about? Well, I want to trade because I like how you can make money trading from anywhere in the world from my laptop and anywhere. Okay, then you got to put the work in, which means you go to school, right? That's why I created Elite Traders University as a school for you to learn these things, to learn seasonalities, to learn about economics, not just learn how to push the button and trade, but there's a lot of things that go behind the decision to trade that makes it look effortless, but requires some amount of learning. Okay, I'm not talking about going through years and years of study. I'm talking about 90 days. And if that sounds attractive to you as an option, rather than going to 4 years at some university trying to figure this stuff out, and they won't teach you anything because it's all ivory tower stuff and not real world stuff. And it will cost you 10 times more going through them than going to Elite Traders University. Again, we're not an accredited university, but however, we're much more effective. Okay. So anyway, my rant is over. I enjoyed you. I hope you enjoyed me. If you did, please like, subscribe, and like this video. Also, tell your friends, forward a link to someone who may need to know if you find it useful. Most of our business comes from word of mouth, and we're rapidly coming to the number of traders that we want to work with. And we'll probably, looking for moving up into other avenues. So if you want to take advantage of this training while it's still available, then go ahead and click the link, apply, and see if it's a good fit. And if we feel like we can work with each other, I'd love to be your coach. Okay. Dr. Greg McLeod signing out. Thank you so much. Again, welcome and goodbye. Thank you. Goodbye. All right. Where is the button to get out of here? All right. Bye now.
If you felt a spark here and want to see how these principles can be used in your own trading, go to www.elitetradersuniversity.com/apply to book a free session with our team. We have helped hundreds of people remove the frustration and obstacles in trading to become consistent, highly profitable traders. These are proven principles that just work. Happy pipping!